GM, welcome to the weekly outlook. This is where I do a high time frame analysis of the markets every single week to prepare you for the trading week ahead. So, got a banger today. We're going to dive into the Bitcoin stock correlation, going to dive into a full high time frame market update, look at the catalysts and risk ahead in the coming days. Going to talk about the escalations, and what we've been seeing over the past couple of days with the ceasefire, because there's been some escalations, some words put out there by Trump. And we'll also dive into a trade of the week, as always, where I dive into a bunch of setups. And last week's setups, they played out absolutely beautifully. So make sure you stay to the end. Don't want to miss this one. Let's get into it, starting with the analysis. So we've got Bitcoin in black and white here, and we've got the S&P 500 in red and green. So where have I taken this comparison from? Well, if we look over here, Saturday, 28th of February, that was, I believe, when the war started, or it was actually, Sunday, 8th of March over here. What we can see is Bitcoin has massively outperformed the stock market in this entire war between US, between Iran, and that makes sense. Bitcoin is decentralized. It's not tied to the US, whereas the stock market is tied to the US. So it's more directly affected by any risk off flows that happen as a result of the war. So made complete sense the fact that Bitcoin has outperformed. So if we start putting them side by side, seeing what this could mean for the coming days, coming weeks ahead, stocks have had a very sharp reversal of the lows. So yes, Bitcoin has outperformed in totality since the war, but stocks are having a much stronger rally. That is because of the result of going down much sharper and much faster due to the war. So the question is, what happens from here? Are we going to actually see stocks break out from all-time highs? If so, you guys know the drill. I want to see closes above the 1.2 to start saying this is going to lead to continuation. But what's more likely is you're coming back for a 0.75 retest. You're probably going to have some chop around here. And the question is whether gap fills are going to be bullish on the stock market, or if we're going to go into further risk off and go back to the lows. So it's a big week ahead. It's a big month ahead to see whether stocks do actually confirm risk on again and find support, or if they do go risk off. Because it's the pullbacks, guys, that show you whether demand is there, whether risk on flows are ready to come back yet. And Bitcoin, of course, is going to be massively affected by that. Yes, stocks have been much weaker for some time now, but that's because they've been way stronger than Bitcoin. Bitcoin already had all of its sell-off over the past few months. As it always does, it tends to top out before the stock market. It's had its 50% decline, it's had its de-risking, whereas stocks have only just had it now. But what that means is Bitcoin is more de-risked. So positioning suggests that Bitcoin, when we do go back risk on again, and we do have that sentiment for flows to actually go into assets, Bitcoin is best positioned for upside because the longs have already been wrecked. And that's the prime example of why you didn't see Bitcoin going down like this while stock market did go down like that. Because longs were already taken out. And Bitcoin's actually been building these higher lows while stocks the entire time had been building lower lows. Complete correlation break. So naturally, you see some reversion of that as people get too excited. They get too bearish stocks and too bullish Bitcoin in the very short term. But the overall high time frame trend now is clear. It's clear that Bitcoin has that overall strength for the past couple months now, since that February bottom, building those higher lows. Stocks have not been. They've been building lower lows. So the question really is, as I said, can pullbacks find demand and build a higher low on stocks? If so, you're likely going to see Bitcoin have a real squeeze up. And I think Bitcoin can start trading towards 80k. There's no reason it can't go there, because it would just be a backtest to some of these gaps over here that we've left previously. It wouldn't even flip Bitcoin necessarily high time frame bull yet. It's still in the class of a bear market rally, because you could end up like this overall and just continue back into the consolidation and reaccumulation, building that base for later on. So the question is, do we get that? Or are we going to see gaps actually lead to lower? If so, then you're probably going to get, again, accumulation example on Bitcoin, but with more tests of the lows. So that's what I'll be watching for in the coming days, coming weeks ahead. S&P has had some real strength in the very short term over Bitcoin, but has it gone up too fast too soon? And on the pullback then, because I do think it has gone up too fast too soon, and I think pullbacks are likely, does it find support is going to be the big question. So let's dive into some of the levels on Bitcoin. We've got this high time frame chart where we have weekly imbalance above between 80 and 86, weekly imbalance below between 49 and 58. They're both untested regions that I think Bitcoin wants to get to at some point. Now, at the moment, it looks like higher is more likely rather than lower. I think when all's said and done, you're probably going to get a test of both of those regions, but they're untested for now. So we zoom into the lower time frame levels. We've got the daily imbalance zone, which has been holding as your support here. This is where we had a bunch of forced selling. So for anyone who doesn't know what imbalance zones are, if you're new to the channel, this is where forced selling occurs. This is where longs get liquidated and forced out of their positions. And that leads to areas that markets tend to retest and have a reaction at. And if they don't, then it gives you your sign, like over here, when it didn't have a reaction at it, that we're much likely to go a lot lower and bears have momentum. So this was an area where markets tried to bottom and lots of people talked about Bitcoin, making new highs, and this could have happened. But price action said otherwise, got to close below, led to momentum down. So that's now an interesting level to backtest on any rallies because you'd expect it to be resistance. You'd expect this to be support. So those are your untested high time frame regions that I think Bitcoin's going to target at some point. But in between there, you've got your inside monthly candle low at 59.8K and your inside monthly candle high at 79.4K. So Bitcoin on the monthly has been trading inside of February's low and high. Volatility is dropping. And when volatility drops, you guys know the drill, it leads to volatility expanding. I'll show you prime examples. Look, volatility drops, leads to the expansion. Volatility drops, leads to the expansion. That's very, very much the nature of price action because everyone gets bored during the low volatility consolidations, but that's where the best positioning is built. The best longs, the best shorts get built in those zones, in those accumulation or distributions, because then you're prepared before the markup or markdown. So what's next on Bitcoin? Well, we've reclaimed that Q2 open pretty strongly. We've shown a real resistance to going lower. You've had that strength over the stock market, flows remaining in Bitcoin. It's not having reaction to risk off as much as stocks are making lower lows. So upside seems easier than downside. But for me, it's very simple. You've got this H4 gap that Bitcoin's currently holding. And if I actually look to this chart over here, what we can see is, first of all, on the daily chart, ceasefire began Tuesday 7th. So the ceasefire low at 67.7K, very, very important level. That's going to be one to really keep an eye on. You've got the bands going green on the daily after setting that trap, which is a really nice pattern because you get everyone bullish, set the trap, liquidate the longs, and then actually potentially start the proper rally. That can take us much higher. But the ceasefire low is going to be your invalidation and your line in the sand for that. And that's what I'm going to be using in the coming days and weeks ahead. So we're above the 50-day EMA right now, that purple line over here. Previously, we've been setting traps and dunking below that over and over. And you can go back to previous history in this downtrend. Keep having this theme of setting traps and going below. Trap, go below. You see this over and over again. 50-day EMA, set trap, go below. So the big question is from here for me is either we're going to hold this 50-day EMA, which we're right at now. We're going to find support here. And this is going to be one consolidation for higher. Or I think we can go for the full gap fill if we're going to lose that 50-day EMA. And again, that can still lead us to going higher. So that's what I'll be watching on this Bitcoin chart for either two paths. Either we come towards 69K to do the full gap fill like we did over here. And it'd just be a repeat of this previous gap fill, and you just get that choppy grind higher that makes it very difficult for traders who are just looking for clean breakouts and retests to trade. Or we'll get the fast scenario, and you see the 50-day EMA hold for once rather than setting the trap. And your inval is the ceasefire low. Very simple. Lose that low, then all the risk on flows that came in, they're wrong. And they have to exit. So below here, risk on flows are wrong. And you'd expect actually Bitcoin to start making its way to some of these new lows in the 60s. As long as you hold the ceasefire low though, all those longs are right. And if they're right, they add to their longs, and that's how you build uptrends. You build uptrends from people buying. You don't always have to outsmart the market, be a contrarian. Trend trading, trend following trading, you want to buy with the wave of buying. And in a downtrend, you want to sell with the wave of selling. So if risk on is going to happen and we're going to see higher prices and 76k and we're going to see the inside monthly candle high get hit, then I think you're going to see the ceasefire low hold. Because bullish flows should come in to support the trend if we're looking for targets higher. Because if you lose that, then support is not coming in, and that's actually a show of weakness. So that's the clear bias for Bitcoin. Very, very simple. Bands are red on the daily after setting the trap. It's got a clear run to potentially target this liquidity above at least at 76k, if not 79.3k. But if we lose the ceasefire low, and you get a bit of risk off, then that's where that's invalidated and you're now looking lower. Simple. That's the bias, guys. Crystal clear there. So that's your Bitcoin update. From here, let's actually dive into catalysts and risk, and then we'll jump into a bunch of trade of the week setups because there's a bunch of different assets I want to look at. So let's quickly talk about the catalysts and risk ahead. So Trump came out with this on Truth Social. So he's just said that, the meeting with Iran went well. Most points were agreed to, but not the one that mattered, which was for them to not pursue their nuclear plans. So this is a big no-no for the US. We know that the US is not going to accept Iran building their nuclear arsenal. So markets have taken this a little bit risk off. That's why you've seen sell-off today, taking all of Saturday's liquidity, taking all of Friday's liquidity. So reversing a lot of the gains, not all the gains for the week. Weekly candle still green, but we've got a big upper wick now, which definitely slows down momentum and probably leads to the choppier scenario. Pullbacks potentially towards 68, but let's see. Got to break the 50-day EMA first for that. But overall, that's your risk off flow that just came in today with this news being dropped, because that potentially suggests that the ceasefire is going to end and the war is going to continue, which in the short term can lead to selling. But the real sign in the markets is going to be if that forms a higher low or not. I always say it, guys, bad news is your best friend, because if bad news can't break the ceasefire low, then that's a divergence, guys. That means sellers, even though bad news has come out, have formed a higher low. They've been unable to break the ceasefire low, and all else being equal, if you lose reasons for a ceasefire, or if the ceasefire ends, then you should be trading below the ceasefire low. Otherwise, bulls are clearly in control and sellers are exhausted. That's going to be your biggest sign that we're going higher. Now, if bearish news does lead to losing the ceasefire low, then bears are in control. And price is respecting the news and catalysts that are coming in. That's known as harmony. So it's going to be very important to watch the escalations and de-escalations, but not just the news. It's how price reacts to the news that reveals whether people are either too short and bears are going to get wrecked despite the bearish news, or if people are getting a bit too long and too excited, then bears are going to be right to bearish news. And vice versa, if we actually get de-escalations and peace, who knows? That seems less likely now with this Trump post, but what are these emojis coming up? Get out of here. Let's go back there. So that's going to be unlikely with Trump coming out with this. You're probably more likely to see escalations, but let's see. That's what you want to watch out for in the coming days ahead. So let's follow it up with trade of the week. So last week, I gave you guys a bunch of banger trades. So Tau, told you, look for shorts around the daily imbalance retests, and well, that played out pretty much beautifully. Wicked right into the daily imbalance over here and down 29%. So absolutely awesome. So a bunch of you catching this trade. If you have been catching these trades, you have been enjoying it, make sure you drop a subscribe, like and comment on this video. you appreciate me dishing out this content for free, then let me know in the comments. It really helps boost the algorithm. And as always, want to follow my trades, come join the school below. You can see all my trades, win, loss, everything. Saw a bunch of you in the comments talking about you wanted me to share everything. That's where I do post everything I actually take, because YouTube, I can only post a 30-minute video in the day, whereas in real trading I can go long, short, could cut the position, could keep it open, can compound it. There's so many different variables that it only really works in Discord the way that trading, of course, works, because I can only give an update once a day on YouTube. I can't give updates every 10 minutes, but I can give you trade ideas, can give you trade service. I know a bunch of you caught that Tau one, so that's absolutely awesome. Got a big dump on that one off the daily imbalance. And hype. So I gave this one last week, mapped out this path. First path got invalidated because we didn't actually close below the 2024 pivot, but we did reach the daily imbalance. So hype, another banger. This isn't a trade that I took, but this was one I was looking at. Was traveling over the weekend, so didn't manage it, but mentioned in the school this setup as well off the daily imbalance zone. That one looks like it's playing out pretty nicely. So from here, I'll be looking for potential re-entries on a retest or on a sweep higher. So I'll be looking for one of two things. You've now formed a gap here on hype. Let's see if it's any high volume on that gap. No. Looks like a pure weekend risk off move, but it's still the gap to watch. So bearish gap over here. Does this gap hold? If so, probably going to see it go something like this and continue on lower. If you actually start closing within the gap, then you're actually more likely to go for a sweep of the highs again. So I'll be watching one of two scenarios, either hype to reject on the retest of this gap and the top's already in, or I'll be looking for potential sweeps at the highs. And again, price action dependent, would be waiting for it to make one of those clear moves and trading it with my systems as always. But you've got a lot of gaps trading into on the daily. This is exactly what I talked about in the last video. When you have so many green daily candles in a row, bulls get euphoric and short trades. Even from a mean reversion standpoint, this can still be bullish and risk on. But from a mean reversion standpoint, it makes sense. And it could be bearish, or it could just form that higher-low scenario. So that's what I'm looking at on hype for potential retest now of that gap to hold. You've also got this H4 imbalance now here. That's been set today off that kind of risk off news, where I'd also look for potential re-entries. So wicks into there. Wouldn't want to see it above the daily imbalance. That can also set up potential short trades, whether it's Sunday night on the CME Open where you get a bit of volatility, or if it's on Monday off that daily open move. Wicks up into there. Also could be a potential valid trade. Essentially, you're looking for areas of retest now, because the trade originally set out last week has already triggered, having rejected the daily imbalance. So if you want re-entries, I'll be looking at hype in one of those three scenarios. So that's hype. Also got some other setups that I've been watching. So S&P was watching a potential short here, you guys know, off this 6840 level, the JPM collar level, and was looking at that for potential swing shorts. I think we're probably going to open up down, but I was more interested in actually looking at the NASDAQ for potential swing shorts if we get a move into the monthly imbalance zone, something like this. So coming back up towards all-time highs is the place where I think people are going to get too bullish. So if you do see rejections there, that's where I think you either get one of two scenarios. You either get this slow, kind of long, let's get the brush, this slow, long drawn out top where you keep sweeping, or if it's going to actually be more bullish, then I could also see the scenario where if you go for pullbacks and hold with a higher low, you can get a bit more of an exhaustion top. So you come into a higher low, then you squeeze up for the proper move before coming back to fill in this H4 gap. And then from there, it's actually a daily gap now. From there, I'll be reassessing, because you might form higher low, continue on higher, or that may be where you make lower lows. So they're probably going to open up lower coming tomorrow due to the risk off news. So going to be watching how it opens on Sunday night, really, to assess any short trades on the stock market, but you've got a lot of inefficiencies to now trade into, which is really nice, what I've been talking about all week. So, as always, in the score, I'll update you guys if I do take any trades there. And Bitcoin, you guys know the setup, as explained in the video. Ceasefire low. As long as that holds, be looking for longs on either the shallow dip scenario, 50-day EMA, or longs on the full gap fill, just like we filled here. So, bunch of setups dived into there. That's the full market update, guys. Oil, quick look at oil. It's rejecting the gap so far. That's going to be an interesting one. If it makes new lows, that's going to be risk on triggers. If it can't make new lows and continues triggering upwards, that's going to be a bit of risk off. So, one to watch Sunday night. We'll keep you guys updated in the score, all the moves we get Sunday night and Monday. Going to be an interesting one with those headlines. So these markets won't open up until Sunday night, and that's where I'll get a better read of what we are seeing risk on or risk off. So if you want to join the school, guys, second link in the description. I'll see you guys in the next one. GM.